Hi guys, once again this is Alfred from BinaryOptionsTutor.com. I'm here today with a quick, well, maybe it's not going to be that quick, Strangle trade on the Nadex platform. I'm doing this in a simulated fashion using a demo account because I don't want any trades in a live account to interfere with the outcome that I can show you guys. And also, this is a new indicator that we've been working on. We've got some deviation levels here, which are going to be there for the entire day. And right now I'm profiling. I have a profile of high and low, and what that means is I'm asking the computer the statistics that are here. These stats are based on the 50 current days, meaning the current day and 49 days prior. So I'm asking the computer to crunch the numbers for me. First, use the formula that we've came up with for our deviation levels, and then crunch the numbers to check out what's the probability, of hitting this number at some point on the day. So what I done was I chose negative 1.5. You can see it got 34%. Now if there are 50 days, then what's one day? One day is worth 2%. Okay. Now 109.139. That's the actual level. The closest I could get to that on Nadex was 109. 109.20 right here. So you see I sold that because it's out of the money. This cost me like $10. Now if we actually hit this number, I'm expecting this to sell for around 50. So I've already set that trade up. The way you would do that is you would just click after you've bought the out of the money, and you would set up the buy, the close position of this, and if it's a sale, then you're going to close with a buy. So I sold, which is really essentially saying I borrowed a contract from someone on the exchange, and I borrowed it with the expense of $10. And if that contract can get back to a value of 50, then I'm going to go and I'm going to buy that contract. And since I sold it at 10 and I'm buying it at 50, I'm going to net 40. But I don't know which way we're going to move. Tomorrow is NFP day, so I also bought a contract right here at 110.60. Okay, now, and that's the closest I could get to a positive 1.5 standard deviation. I bought this contract for about $20, and we're still trading around that number, maybe just under 20. I got it for about 19 and some change. And again, if this contract hits 50, I've already got it set up using the same technique to go ahead and sell. Because how do you close the buy? You close it with a sell. Now if that works, then I'm going to net 30. Now what did I spend on the other contract? I spent 10. So I'll still be up 20. Even if the other contract, if there's nothing I can do with it, it's probably going to be about worthless if this side works. So I'm going to assume that that's what's going to happen. Either way, could it touch both sides at some point in the day? Maybe, but I'm not going to give you a Pollyanna story. What you're really looking for with a Strangle, or what I'm looking for with this kind of combination of Strangle and scalping, is I'm just looking for it to touch one of these sides, because I've purchased both of my sides here with less than $50. So if it touches one and one side gets to be worth 50, then I'm going to be net profitable. And that's what the strangle is all about. Looking at our probabilities, you're probably saying, well, why didn't I just take the sales side? Because the numbers over here on the sales side, they look a lot better, than the numbers over here on the buy side. Well, to me, in my mind, like whether it's the 34% here or it's the 10% here, when I add those numbers together, I get 44. And the combined cost of my contracts was like 30. So I'm getting some wholesale pricing, and that's the first thing you want. And another thing is, I don't know which side it's going to go on. And I want to point out something when you talk about using statistics, okay? Statistics, and I say this all the time on this channel, statistics are not gospel. I've told you that the window that we chose is like a 50-day window. Now let's go and look at a daily chart. See, all of this downtrend here, the reason that the statistics are so biased to the downside is because this is the way the market is playing out in and of itself. So in our particular windowing, it's a little biased. Sometimes when you're running statistics over a larger period of time, you'll get excited because you'll see this definite bias, and you'll be like, oh, okay, now I see what's up. I'm gonna go out here and make this money. But another thing you can do, rather than just taking stats as gospel and trading like a computer, we are human beings and we have a consciousness. So we can go and use our intuition and use our consciousness to look over that window, because we're aware that there's a window here. Don't just take everything at face value. You can look at that windowing and see if there's a bias that's plugged into your particular windowing. For me, when we designed this indicator, we settled at 50. It's going to keep the stats pretty current, and we can be aware of the windowing. That's just something that happens when you're doing statistical analysis. Some people call it statistical arbitrage, because what I've done is I've purchased at a combined price of 30, and if you looked at my statistics over here, there's a combined price of 10 and 34, which that adds up to 44. So if either of my sides actually even got to 44, according to this data, that would probably be fair value. So really I could go and sell either side at 48. Also, you'll notice that the numbers I chose, they were just below, like 109.139, 109.20 is going to be just above it, and that's cool for me, because I realized in order to get to 50, I've not only got to really hit the strike, I've got to get a little bit beyond the strike. So when I'm doing something like this, I'm going to try and find some numbers that I'm hoping that if they hold up, they're going to get beyond the strike. Now, this NFP day, so I'm expecting some volatility. So I'm expecting one of these sides on this little strangle to work. So I'm going to stop the video right here. We're going to see will any of these pan out. If only one side pans out, then it's going to be a profitable strangle. And that's how we put that together. And that's just a little glimpse at the deviation levels. We're trying to work on some indicators that will be useful for, well, the way I showed you right there, that makes it very useful for Nadex. But there are a lot of applications for this type of statistical arbitrage. It's just, I'm just using it in a way that's useful for this platform. But let's say if I were trading spot, I would be looking for a level that when we hit that level, I could be aware that it's not very often that we actually hit that level. Let's say because there's a bias already plugged into the downside, if we got up here, let's say all the way up in here, 2.5 positive, then that might be a good place for me to short at, because it's above value area high, and it's a level that, well, basically, you know, we've only hit like one time in the last 50 days. So that gives me a good positioning for going in and going short. That's if I was just trading spot, but we're just focused on a little Nadex straddle, a Nadex strangle, and we're gonna see what happens with this bet. See you guys on the other side of this bet. Once again, this is Alfred from Binary Options Tutor.com. Today we are looking at our own deviation levels with probability. Hi guys, I'm back on the other side of this trade. This gigantic candle you see here, it did in fact make it up here to our plus 1.5 deviation, and you can see we're still registering just a skosh above 110.60. And if we go over to Nadex, where we were doing this strangle at, you can see right here there's nothing left in my open positions but 109.20. So I actually did get out of the other position there with profits. Now this position here, like I talked about, we're so far away now that positions are really probably going to just expire worthless. So that's cool because I made enough off of one side of the strangle to actually cover, you know, the cost of both sides of the strangle. It's like just taking advantage of that statistical arbitrage. Also, you'll note that the least likely of these bets, you know, according to our stats, was this top side bet. But I showed you earlier, the bias was there to the downside, and often on NFP you'll get a surprise, and there'll be a surprise most guys just weren't anticipating, and that's why I tried to cover some of the stuff about looking at the bias beforehand. That's all I have for today, guys. Just short video. When I got into this strangle, we were about 12 hours out, and you can see here that we still have about 6 hours, but I was really expecting a pop to happen early Friday morning with the NFP numbers coming out. See you guys on the next video. Once again, this is Alfred. Like, share, comment, subscribe. If we've helped you, please help us by sharing this content with others.